Atkore stock is down 37% in the past year, and I believe it has the potential to become a multi-bagger. Therefore, in this video, I am going to do an in-depth analysis of the company by looking at the financials, the forecast, some important statistics, using my spreadsheet to calculate the intrinsic value of the company, looking at the main risk of investing in this company, as well as explaining why I just added it to my portfolio. Let's quickly explain what is a 100 bagger. These are stocks that return $100 for every dollar invested, meaning that a $10,000 investment turns into $1 million. Atkore is a small company as the market cap is only $1.9 billion. Now, this is very important when finding a multi-bagger because small companies can grow to 10 times or 20 times and still be small. They can even become 100 baggers. Apple today, by contrast, has a $766 billion market cap, so we can safely assume it won't go up 10 times or 20 times, and certainly not 100-fold. They also pay a dividend with a yield of 2.2%, and analysts have a price target of $79 per share, which is 37% upside. Current PE is 17 and the forward PE is 10. However, I will explain later why I believe the stock is trading even cheaper. If we take a look at their financials, as you can see, their revenue was growing until 2022. However, since then, it has been decreasing. The reason being is because this is a cyclical stock. So let's briefly explain how Atkore makes money. Very simply, Atkore makes the pipes, cables, and parts that keep buildings and infrastructure powered and connected. Continuing with their financials, net income, like revenue, grew until 2022 and reached $913 million. Since then, it has been dropping and it is currently at $112.3 million. This is a company that has more free cash flow. Again, the same, it grew until 2022 and it is currently at $261 million. And one of the main reasons why I believe this is a multi-bagger is because of the number of shares outstanding. They have been buying back a ton of shares, as you can see, at an average of 7% per year. In the book 100 Baggers, Christopher Mayer has a whole chapter on stock buybacks and how it can accelerate returns, so we will see more of this later. In order to calculate the intrinsic value of Atkore, I use my spreadsheet. This tells me at what price you should buy a stock based on your assumptions about the future of the company. I did a 7-year analysis with low, middle, and high assumptions. And as you can see, the intrinsic value according to my low assumptions is $98 per share, according to the middle, $171, and according to the high assumptions, $272 per share. Now, this also means that if my low assumptions occur and you buy the stock at today's price, which is $57 per share, you will get a 22% annual return on your money, middle 35.5%, and high 48%. So as you can see, this is why I believe it's gonna be a multi-bagger. And I believe my assumptions are reasonable as I have the company growing revenue between 0 and 4% for the next 7 years, averaging a profit margin and free cash flow margin between 10 and 18%, because as you can see, although the profit margin is currently 3%, they used to do between 15 and 20, and free cash flow margin is currently at 9%, and they used to do also between 14 and 18. And I assigned a PM price to free cash flow at the end of the 7 years of 10, 12, and 14. If you want to make your own assumptions, I'm going to leave a link in the description below. It's super simple to use because I have done all the calculations in the background, so you only need to focus on the inputs that matter. As you can see, I assume Atkore buys 3% of their shares annually for the next 7 years. This is key when finding a multi-bagger. In the book, Christopher Mayer has a whole chapter on it, because buybacks act as an accelerant when done properly. A buyback is when a company buys back its own stock. As a company buys back shares, its future earnings, dividends, and assets concentrates in the hands of an ever-shrinking shareholder base. What this means is that you share the profits with less people. And now I'm going to demonstrate how this affects future returns. So if I assume that they don't buy back any shares, so 0%, our returns go from 22, 35, and 48 to 18, 31, and 43. So as you can see, it affects future returns drastically. I'm going to go over the main risk of investing in Atkore. Number one is the cyclical exposure to construction and infrastructure. So Atkore's business is tied to non-residential construction, utilities, and industrial projects. During economic slowdowns or recessions, spending on these projects falls, leading to lower demand for Atkore's products and weaker revenue. Number two is the raw material volatility. So Atkore relies heavily on steel, copper, aluminum, and PVC. Price swings in these commodities can pressure margins, especially if Atkore can't pass costs onto customers quickly. In downturns, falling prices can also force them to sell products at lower margins. Number three is growth limited by mature markets. The company operates in a relatively mature industry where long-term growth is closely linked to GDP and infrastructure investment. Without major innovation or acquisitions, organic growth could stagnate over time. Number four is competitive pressures. Atkore competes with both large multinational manufacturers and regional players. In periods of weak demand, customers may switch to cheaper alternatives, putting pressure on pricing and market share. And number five is customer concentration. A significant portion of revenue comes from a small group of distributors and contractors. If a key customer reduces purchases or switches to a rival supplier, Atkore sales could take a noticeable hit. And I want to mention that Atkore has a dividend yield of 2.2%, and it is a safe dividend as the payout ratio is 40.4%. This means that it takes 40% of their net income to pay the dividend, because dividends come from net income / free cash flow, and anything under 50%, in my opinion, is a safe dividend. In conclusion, I believe Atkore stock can become a multi-bagger, and I believe it's a buy right now, because the valuation is extremely cheap. They are buying back a ton of shares, they pay a great dividend, and I believe the risk of investing in this company are due because this is a cyclical business. Video valuable? Let me know what you think about Atkore stock in the comments, and I'll see you in the next one.